all the way back down to form a. We'll see what happens with the price action if we go below, 29,000 in Bitcoin, then that would be the C. Or we have completed what looks like a 1, 2, 3, 4, 5, and I'll show it here in a second, but it looks like we actually completed a wave 5. I mean, there's like 3 or 4 different. All right, so I guess this is going to be episode 1 of the Crypto Corner Chat.
All right.
Live YouTube. Or we won't make this live, but we'll upload it. But it'll be episode 1 of Crypto Corner Chat. It's going to kind of be a test version for us. So the
2022.
Right. So man, let's just start off by we've already kind of been discussing how the geopolitical events are. We're starting to see those things show up in the technicals, like within Bitcoin, Ethereum, the crypto market as a whole. Within when it comes to interest rates, what the Fed's going to do, which is affecting everything. So you got the geopolitical down. So tell me, what do you think's going on in with Ukraine? How do you see this going down?
So, I mean, people have to kind of understand Ukraine as a whole. You can't take it in the last, as in from the time it separated from the USSR. There's a historical element to Ukraine and the Russian relationship that goes far back as to Kiev, the city where the Rus launched as a power in Eastern Europe. And Moscow is a secondary city that became the new capital of the Rus. You know what I mean? So there's a historical relationship and as well as an energy relationship. The Donbass, which is the territory in question that it has separated, which has 2 regions, but overall is the area is called the Donbass. It's separated from Ukraine in the last few years as a result of the Poroshenko issue and him running away to Russia, and then the new elections with the new president. So all these come into play as into the situation. The Donbass is energy rich. There's a historical element to that, to where they supplied Russia with, the USSR and before with a huge amount of coal. So there's a lot of interest in the Donbass. It has a majority Russian population. So at this point in time, you're seeing a push by NATO, which essentially is the U.S., which is us. And how does that affect us in terms? It affects our markets. It affects the U.S. dollar. It affects so many things because you're talking about the military-industrial complex, talking about so many things that go into this analysis that affects not only the crypto market but the overall market in general. So all these elements come into play. So at this point, you're having a push from NATO, which is the U.S., to put pressure on Russia to a certain extent over the Ukraine. And the Ukraine is a threat, is a gateway to the invasion of Moscow and Russia. It's already happened twice. The last one was in World War II. The Russians have a utility in terms of energy and security. So it's a very big, important matter for that area. At this time, there's talk of conflict. And in the last few days, Biden mentioned that anything other than a limited incursion is not identified as a war, is not considered as a war. So essentially, that's a green light for the Russians to say, who have mounted over 100,000 troops on the border, to go into the Donbass, assist the Donbass to declare independence. Those 2 states would declare independence within the Donbass region. That would separate. And then you would have a reason for the Ukraine to have NATO forces and become part of NATO in the Donbass. So you're looking at that. That's essentially, my point of view, is the overall objective here. And you're going to see a limited incursion due to that limited incursion, just like the Georgia incident. And you have the blueprint, what they've done in Georgia in the South, preventing NATO from coming in there. You're going to see a limited incursion where you'll see a lot of people running into the USD as well as Bitcoin. And whether it's legal or legitimate money will determine whether it goes into USDT and USDC. And you're going to see a influx, in my opinion, due to that limited conflict, which should affect the influx of the US dollar to the upside, as well as the other cryptocurrencies for the coming 3 to 6 months. And that's how I see that political affecting crypto at this point.
Right. So explain to me, like, how you said, so what's the territory? It's called the Donbass, you said?
It's Donbass. Anyone can go. I like to go to different resources, but I definitely suggest that Britannica Online. And it easily gives you a round out history, a little bit more detailed way more detailed than I'm providing, just for the sake of, I'm just hitting certain points because we don't want to, takes forever. But yeah, the Donbass, which is two regions that have separated from the Ukraine due to the, what some view as a coup, what others view as a democratic revolution. You decide. That's sort of how you look at politics and how you look at world politics. And as a result, you had Crimea go to the Russians through some say a puppet election that was rigged. Others say no, it was a democratic election where the majority of Crimeans who have Russian roots and are Russian speaking voted to separate and become part of Russia or have some sort of link to Russia. They built a bridge to connect Crimea to mainland Russia. The other two regions have declared their autonomy and are military armed. They have militias, and you have the Ukrainian military involved. So the next step for that region that consists of those two different states would be to declare independence.
So are you okay? So I guess we should back up just for a second, like, because you have you studied this. Like, what was your, just speaking to the audience now, like, what do you have a master's in this or some type of degree in?
I have a political science degree from the University of Kentucky. I also have an international relations degree from the University of Kentucky. I served in the U.S. military as an infantryman as well as a linguist. I was attached to the 1st of the 120th and deployed to the MFO multinational force, which is an observation force that's in the south, in the Sinai, from the north to the south, that borders Israel as well as Egypt. So I have a bit of an insight into this. I also, this is, I'm in government, but in state government. But I still, follow domestic as well as international politics because that's my area of study. I also earned a master's in human resources from Penn State. It's human resources and employee relations, which is also a different form of social science that provides a different view in terms of what a lot of Americans understand as socialism versus capitalism, the struggle of labor, equity, in terms of equity and voice. So all that education and that experience, and also spent time at the University of Jordan doing courses in conflict resolution, and several other courses. I speak I'm fluent in Arabic. I read and write in the Arabic language. I'm fluent in the Middle Eastern politics, which involves right now at this point the big issue of Syria and Iran. So that's sort of my education, and in a sum, my education and my background.
Yeah, so you're pretty. I mean, you're extremely well educated, and then I come from the point of view where I've been in crypto since 2013, and so I've seen it kind of rise from being this kid, this little baby, to becoming maybe an infant to a teenager, and now we're entering into where it's trying to enter into something like adulthood, where it's being adopted by mainstream institutions, and so I've seen it rise from where geopolitical events didn't really affect crypto much in the beginning because it was so new, and the adoption it at first it was going to be used as money, and then the narrative changed as inflation became more and more rampant, that it was going to be used as as far as Bitcoin, as a hedge against inflation. But it didn't really matter what the narrative was really at that time, because it's just technology and it's going to be used for something. The community was just trying to figure out what that something was going to be. It just so happened that at the time, the best thing for it was the main reason why it was created, was basically just to try to get outside the system as much as you can. And it just so happens that the reason why you're going to do that is because of inflation. And so, but now, do you see what you're talking about as being more of a deflationary event in the long run, or more of an inflationary event?
Well, there's going to be inflation. It just depends on where. Inflation is already set. I mean, the numbers support that, and we feel it. I think with that influx of money due to conflict, that's always going to be inflationary in the short term. In terms of deflationary in the long term, I really don't have an answer for that at this point. I would have to, because there's so many unknowns. We're thinking that it could be a limited, but I could definitely be wrong. And then it's something protracted and it grows into something more of a regional conflict with other players coming in. I don't see that happening because of the issue with Iran wanting to contain that, and you need Russia's cooperation within that because they're the biggest influencer, including China, on Iran right now. You also have the Taiwan issue with the U.S. and China. So I don't see anyone wanting it to go bigger than that, but people can miscalculate. So because of that, I don't see any kind of deflation in the future because of those uncertainties. So I would definitely have to lean into, it's going to be inflationary regardless, at least for fiat.
Do you see Fed policy being driven by this, at least current Fed policy being driven by Ukraine specifically right now? Or do you see it being driven more in terms of or is Russia basically trying to use the leverage that China now has in the world to kind of put, I don't know, put their foothold back in place like they used to have in the world, whereas what I guess from what I'm gathering just from our conversations, like at one point Russia used to have much more influence than what it has until recently. Am I correct on that?
It's regained after the fall of the Soviet Union.
Yeah.
I mean, the Soviet economy did well until we outspent it. It wasn't that they were doing bad. It's just it couldn't grow because it was controlled. China found a solution to that, and that's why China is a semi-controlled. It's still controlled, but it allows partnerships in private sectors, and that we complain about that in a lot of ways. But it benefited the Chinese. They learned from the USSR. The Russians now are capitalists, but it's more like the Germans in a lot of ways, where they control a lot of their industry. But they're still capitalists, right? So I think it's a game of leverage and interests. I don't think so. In terms of the reserve has its own interest, and it's going to follow its own interest. I don't think it's going to base its decisions on Ukraine, and I think it will take advantage of the Ukraine situation, like many of us should, in terms of financially, because you're going to see transfer of wealth. You're going to see wealth escaping that area. And of course, no matter what anyone tells you, yes, the U.S. might be a waning power, the dollar might be a waning power, but still it's the most respected, at least in terms of reserve of wealth vehicle. People aren't going to go into the euro or the yuan or anyone else. They're going to go into the U.S. dollar. The alternative to that is going to be Bitcoin. That's where I think we're going to be affected. Yeah, I think that's sort of where the Fed is going to look at it. They're not going to be worried about. They're going to do what the Fed is going to do, and America follows American interests. So the Fed will follow its interests. They're not worried about Ukraine or Russia. They'll take advantage of Ukraine and Russia, which that's politics. That's
sure.
Right. That's how economics go. That's business. You see an opportunity, you take up. That's what we do in crypto. You see an opportunity, you prices are down. Let's buy in because that's an opportunity.
Right. So, but from what I'm seeing, we're seeing a lot of panic over the once the Fed came out and said that they were going to start raising rates, right? You started seeing that was kind of like the beginning of the so where did we leave off? So you said that. Can you hear me, Adel?
Yeah, I can hear you. So I said that we're going. The Fed, just like the U.S., will follow its own interest. It's not worried about anyone else. They're going to control and manipulate and take advantage of the situation. They're not going to base their decision making. I mean, they're basing decision making, but just for that part of their strategy, not based on our economy. I mean, they might be doing that to give the economy a boost, but in terms of the military industrial complex and other things. So.
Right, and I muted my side, and in what I was saying, and we can always go back and cut things, but what I was saying was that. So the top came into the market right around the time that the Fed started talking about tampering and raising rates and those type of things. So with what you're saying, I'm expecting the Fed not to actually do anything in the upcoming FOMC minutes because this in itself will end up supporting the dollar from what you're saying, correct?
That will support the dollar.
Yeah.
Because if you think of it, anytime you have conflict, the Middle East, every conflict that we have, what happens to the dollar?
Right. It rallies. Yeah.
But anytime there's a conflict in Africa or a conflict in Kazakhstan a couple of weeks ago, any conflict that happens in the world, gold, silver, and the good old U.S. dollar, the USD, the nice greenback is always jumping and it's strong because it's a reserve. People know that if I put my money into the dollar, I'm good because it's backed by the U.S. Yeah, we're waning right now, but it's still at this point in time. I don't know what will happen down the road, but at this point in time, the only player in the game is the dollar. Other than fiat, and specifically fiat.
Which means that there would really be no reason for them to increase rates. I mean, because they can use this little event at this point in time. I don't know about March. I don't know about what's going to happen. I'm talking short term.
They can delay it. They can come out. I mean, this is when we'll know Well, this is an indicator when you're looking at analysis, right? So if we've identified that, okay, should they raise rates? Are they going to announce that they're going to raise rates now that there's this issue going on? And it's a low intensity conflict because it's been going on in terms for some years between within Ukraine. But now we're looking at on the international level. So people are anxious and scared. We'll see what they decide. If they come out and say, hey guys, we're going to delay our decision for a week.
Yeah.
What's that mean?
Right. Yeah. It to me, that means they're not going to raise rates. I mean, they're not going to raise rates for. Are they going to wait to see what happens with the conflict? With the are there some type of political move that's going to happen? What's that?
I said, yeah, with the potential conflict in Ukraine, and don't forget Iran. You can't forget Iran. Right now, Ukraine is the end thing because it's in the news. Iran's always in the news. It's just you have two factors to think about when it comes to that.
Okay, so on the short term, I mean, that to me that makes sense, right? In terms of what we're seeing, also what we're seeing technically. It seems like the market is not at all taking this. I don't see the market taking this into consideration yet. Like maybe the smart monies down here buying are starting to buy, and because they're aware of what's going on and they know how this is going to affect Fed policy, and they're seeing a possible opportunity right now because just me not having that information, when I just look at the charts and I just look at pure technicals and that's all I'm looking at, like I'm looking at a situation where coming into this week or the following week to where we finally hit I don't know if it's going to be a short-term bottom or a long-term bottom, but we're going to hit some type of bottom. It might be short-term that can lead into long-term, right? So but we're definitely I feel, looking at the charts and through just all my years of analysis, I see the potential for a nice move back to the upside. That it might take a couple weeks to form, but I see a bottom coming, not today, maybe not tomorrow, but heading into the FOMC meeting. I just find it very ironic based off what I'm looking at on my Tom DeMark and on some of my other indicators, and listening to what you're saying and seeing what, trying all of it kind of just, it's too convenient, right?
I mean, nothing, in political science and in international relations or in anything, there's no coincidence. I mean, people try to kind of measure and see how things go, right? And then they put things in motion, right? But we remember we've always discussed this, that institutions want to come in. The people who missed out want to come in, but they don't want to come in at 52 or 48 or 46. No. So they want to come in at a good price. All that being said, with everything that's going on, let's say that where's Bitcoin right now? 35, holding at 35 right now?
Right, it's at 35. I mean, it's still okay. So, and that's the thing. Like, so you have, I believe I heard it. I was listening today, and I did some research today on this. MicroStrategies is average price is right around 30 to 31. Okay. So that's your main. Obviously, you got to be living under a rock, but that's your biggest institutional buyer right now, right?
Right.
So I would think that he would defend that level, right? Because that's going to impact MicroStrategy's bottom line as well in terms of valuing their what's on their books. Right. Technically, that is also a pretty sizable support area also, and I can get into the technicals here in just a second.
Yeah, for sure, because we're going to need that, because all this analysis has to be applied to the technical so we can see what is going on and understand it, so we can take advantage of it.
Right, and I'm just trying to get a grasp of the shorter term fundamentals that are in play right now, right, and also that are leading into long term. So, in long term, fundamentally, like you said, we know that you have plenty of money, institutional money. You have the big families in the Middle East that want to get in, right? You have
they want to. Plus, a lot of those they don't want to be in the dollar.
Okay.
They want to have because think of this as well, in the Middle East and in Africa and in Central Asia, like Kazakhstan. A lot of them go into gold. When we're talking about gold, we're talking about bars and coins of 24 karat and below, down to maybe 20. So a lot of them that's their jewelry. That's what they have in their houses. That's what they put in their banks. So
I just know they're trying to come in.
You can't travel with that. I mean, you can travel to a certain amount,
right?
10,000 maybe. What are you going to do with the rest?
And you have a lot of these large pools of money that just can't come in and just buy Bitcoin like all at one time. It cannot happen. There's just too much money, and the asset is just too finite. So they're going to come in through mining. They're going to come in through buying the picks and shovels.
Supply right now, available supply of Bitcoin that people can buy.
Yeah, it's only 2 or 3. It's only about 2 million. Here, I'll look it up real quick. I'll just do a quick search. But yeah, it's only about 2 million. So there's not enough.
Yeah, like 2 under. So it's not we're estimating 2, but we're being generous. Would that be fair to say? Because I've read where there's 1.2 to some saying 1.7.
Depending on the day, let's just say 2 million, right? Okay. In terms of people that are not, there's about 2 million 2 million supply that people are just trading, they're speculating with. Okay, and then you have another. I can't remember the exact number, but it's a large number. It's like you have the million Bitcoin that's never going to be. It's Satoshi Nakamoto's address. Those aren't ever going to be moved. So now you're at instead of the total supply being 21 million, you're really only dealing with 20 million, right? And then you have all the Bitcoin that's been lost, and you have all the Bitcoin then you have all the people that are hodling that are just never freaking going to sell, like MicroStrategies. Right. And so then that boils down to you only have maybe probably less than 10% of the supply that's actually being traded, right? So yeah, they just can't just come in because they know that they're going to be just buying. Like they're going to be forcing themselves to keep buying at higher prices if they do that. And once the market takes off, now and that's what I'm looking at. That's what I'm trying to determine. Like we know they're coming in, we just don't know. And like you said, they're not going to come in at higher prices and start bidding themselves up. That's like they're not going to do that. And then they're also going to want to control. They're not going to come. They're going to want to. They're buying the picks and shovels. They're buying the MicroStrategies. They're buying the coin. They're buying Coinbase. They're buying. They're figuring out how to get into mining.
Yeah, right. Any tool that they can secure their wealth in.
Right, so that they can have more control of the space as well, like going forward. So that makes me think we're not going to and I'll just get into the technicals right now, because listening to what you're saying and trying to put all the pieces together, I could see us having a short-term bounce.
Can you show those technicals for us?
Yeah, I'm going to do it right now. Mm-hmm. All right. I can see us having a short-term bounce. I cannot. I'm not 100% convinced. Let's see if I can share this. And tell me if you can see this.
Yep. I
All
can
right,
see it.
Nice. And does it?
All right, yeah, let's see this so we all can get that visual.
Right. Okay. So I'm on Ethereum right now. I'll switch it over to Bitcoin.
Okay. And now Ethereum is going to be a player too. They will put their money in Ethereum. Don't forget about Ethereum. But
Absolutely. To me, Ethereum is more like a utility. To me, Bitcoin's more at like a utility. I'm sorry, Ethereum is more of like a utility, and Bitcoin it's more of a, it's actually becoming more of part of the macro, taking the place of gold or a secondary.
It's a storage mechanism, storage vehicle.
Yeah, absolutely. So this is what I find interesting right now from a technical point of view, and listening to what you're saying, coming into the FOMC, is that we're on the short term. I'm on the 3-day chart or the 3-day bar chart. So every bar is a 3-day period. So right now, this bar started on the 22nd, the bar that we're on right now. And this bar will end on the 25th, on the 24th, going into the 25th. So that's going into the FOMC, right? So on the next print on this bar we'll know what's going on with the FOMC meeting. Now, what I find interesting is that like we're on a 9 right now on the Tom DeMark. So that means we're on a pivot on the 3-day. So to me, with all the fear out there of the Fed increasing rates, and in combination with this being a 9, which means that we are in extreme territories. Looking at the fear and greed index, I was looking at that this morning, and we were at a 17, and today. And today we're at an 11. So it's over. We are at overkill zone to the downside. Like people have completely thrown in the towel, and they're just they're like puking and throwing up, and they're just completely over exaggerating, what's going on here.
That's the weekend. The weekends threw in.
Oh, completely. And it might not even. It might be that they were forced to throw in because there was like $2 billion that was liquidated in leverage positions.
Right.
So they may be forced to throw in the towel. They got liquidated. Right. Now, right now I'm pulling up an RSI, and I'm expanding this RSI, which lets you know the relative strength of the market, the overall strength of the market. My setting's at a 9. And so the importance of this is you can see this right here. If you can see this right here is March 2020. So this is the coronavirus dump right here, right there. So we are at the exact same levels in terms of the strength of the market. So we are pricing this in, like in terms of the fear, the strength. We are at the exact same levels in Bitcoin as we were during the coronavirus dump, which is insane to me.
You have the Omicron going, or I'm sure I'm saying it wrong. The transformer virus going on right now, so maybe that adds to that. I mean,
it could, but I don't think coronavirus is playing much into the technicals anymore. I think people are just kind of done with, I don't think that people are this right here, this other low that we had, this where the RSI came down to about a 9, 10, 9, about a 9. This was the capitulation when we went down to $3,000 Bitcoin in November 2018. That was the complete capitulation of the market. So it's only been lower. The RSI has only been lower than what it is now at one other time in Bitcoin's history. And I'm looking just at the 3-day. I can go to the weekly. It's the same thing.
Right. Let's look at that real quick.
So you can see the weekly. Let me get rid of this. So same thing, right? We're right at the levels of where we were during the coronavirus. And this is the inception of the chart right here. So I can't really, the price was like $40 or something back then. And then we have the capitulation that happened in 2018, which, was the crypto winter. So I don't see this. Usually when you're this, almost 100% of the time, when you get this overdone on the RSI, you're going to see a bounce at a minimum, right?
Right.
So I'm taking this, and it doesn't mean that you can't go a little bit lower in price like it is right now. Like we might hit 32, 31, 30, but we're going to get a bounce at some point, at minimum a bounce, right? And then if it wants to head lower, it can. So I'm looking at that, and right now, and I'm looking at this 9 that we have on the TD. I'm hearing what you're saying. We're heading to the FOMC. I don't think they need to raise rates heading into the FOMC meeting. I think that they can hold off, and I think that would surprise the market.
People flood back in, you would think, if they say, okay,
I think
well, hey,
people can flood back in, right? And I can go deeper into this too, man. Like, so I'm just looking just at one type of charting way to do charting. There's other ways that I can look at this. I can just do simple trend line, right? So we'll know if people are coming back in. If we really want to get things heated up, we are in here's your downtrend right here. So we can, if we break that to the upside, it could potentially mean game on, right? So I'm expecting something like this in the short term.
Right.
Let me get rid of that. God. I'm expecting us to take a nice little bounce back up to maybe the $36,000, $37,000, $38,000 area. This is going to this trend line should act as some type of resistance. And I think that this could happen next week, right?
Okay.
Now, I'm expecting us to get some type of a bounce. Now, what happens at this point is going to be critical. Like if it bounces and we see weakness right here and we continue on down to the downside at that point, then I study Elliott Wave. Then the Elliott Wave count that I initially had showing that we are in a wave 5 or we're headed into a wave 5, that would be wrong. That would mean that the wave 5 already occurred here, right? And I'll have to do a separate video on Elliott Wave because it gets pretty deep. But essentially we are either on a wave 5 or we are on a wave. We've already had our wave 5. We haven't completed our wave 5, or we're still completing a wave 4 within this market.
Okay. So
in every single one of those, possibilities, there's a big difference in what's going to happen between each one of those each one of those possibilities. So if we have, yeah, no, if you have questions, definitely ask. But if this was a wave 5 right here, let's say this was the wave 5,
right?
Sorry for my, let's say that is the wave 5 right there. Okay. If this is the wave 5, then we are headed into a bear market,
Right.
like deep bear market. Like it's going to be it might not be as brutal as the crypto winter, but the fact that I keep hearing that no one thinks that that's ever going to happen again, that worries me, because the market likes to go to the place of the most amount of pain, right? So I'm keeping that in the back of my mind, that this was a wave 5. 1, 2, 3, 4, 5. Completing that wave 5 right here of this phase. And then your wave 4 would have been down here. Right? So, and then this would have been your wave 3 up here. Right there, right? Okay. So you would have gotten some that would have been like this. And let me know if all this if it isn't making sense. But you would have had a 1. You would have had a 2. 1, 2, 3, 4, 5. Okay? Now, what I'm hoping, or not necessarily hoping, but what I'm thinking that we have here is a 1, 2, 3 in that, and then this over here is going to be 4. And then we go to 5. So I'm thinking we could see something like this. So you get a 4 down here.
What would you consider that dip then? After 3? So that line, so your line is going to kind of the slant on it is going to change. Okay.
So
the A collection.
So this would be an A, B, a truncated B, C to complete 4.
Okay.
And that's a possibility.
Okay, I see what you're saying.
And then we head to the upside, right? So then we go, boom, we head to the upside too, and we have a massive. I mean, if this is what is happening right now, the wave 5 is going to be absolutely ridiculous.
So you think that the last year's assessment or analysis that suggested 125 to 250 would come around by the end of this year?
500,000 would come into play.
This year, the end of this year.
Into 2023.
Okay.
So it's going to be your 4-year cycle theory would kind of be out the window at that point, or not completely out the window. The peak would come very, very, very late in the cycle, right?
Would you say that that cycle would be affected by the macro and the effort? Because right now you have the transition from fiat to digital. They're just trying to figure out how to do that transition. Would you say that's affecting this wavelength, this cycle?
Yeah, I think it's multiple things. So I think the geopolitical events that are going on are definitely having a bigger impact on this cycle than they ever have for any other cycle that we've ever And so I don't.
Because we have to look at it as like the Great Reset as well, right? Because every 100 years you have a cycle, you have a Great Reset. It doesn't necessarily happen perfectly at that time, but look at, early 19th century, World War I, World War II, the new monetary system, the IMF, the World Trade Organization, the United Nations. Now we're looking at another reset. I mean, the transition of power from the West to the East. The population, the East is building a consumer economy. China has 600 million new middle class that are spending money and traveling. I mean, these are all resets. That used to be us.
Right. And you're seeing I think there's a power struggle going on. Like you have, okay, this is, all right, we're going to go, yeah, like, so, and this is me having to use my common sense along with a little bit of speculation, along with what you're, a lot of the facts, and just trying to draw conclusions, right?
Right.
So I think there's a major power struggle. I think there is a huge move, a huge flex to see who's going to own the new system, or who's going to have power in the new system. And like you said, it's like you got a bunch of major players sitting at a table, and they're all kind of it's like playing a big poker game,
they're deciding what is going to be the new system.
Right, exactly.
They're playing a power. They're playing. They're applying game theory that's in real world, involving armies and missiles and.
Right, exactly.
Just real world results.
Right. No one wants war because it's not good for anybody. It's not going to be good for anybody at this point. China doesn't want it because of the way that their system is built.
It's not good for business.
Right, and the U.S. doesn't want it because we can't handle a war right now, and the American people.
We want money too. Our interest is to be involved in the East, to be accepted as equal partners in the East. But unfortunately, we are not very liked in the East. I don't blame them.
Right.
That's what we want to play. So we're putting pressure. Be like, hey, South China Sea, you want to have that secure? We can secure it for you. The Chinese is like, no, we don't want to be extorted.
Right.
That's where we're at.
Right, and the elites want they want to maintain. All of them agree that they want to maintain their power. That's what I conclude from this. Like the elites, if you believe that there's an elite power out there that they're trying to control the world, basically, I believe that. And so if you take that theory, like, which to me it's not even a theory, it's a fact, right? So the if that is happening, right, then if you have a large group trying to control everything, they're going to agree to each other that we at least have to try to control the populations. Like we can't allow crypto just to do whatever it wants to do. We can't allow for DeFi to just take off and become completely decentralized, where it's completely out of their hands. There's nothing they can do. They can't stop it. It's too big.
Decentralization is not a good thing for someone who has a closed system. And
right, exactly.
Right now, the financial system is banking in the financial system is a closed club. They go to Davos and rub elbows and he, what's going on? Let's do this together, and that's what they do. They don't want to lose that.
Right. And so they can put Bitcoin in a. That's why they're not at this point in time. Up to this point, they weren't really that threatened by Bitcoin. But now that they're kind of seeing what it is, it's a Trojan horse. I think that there is they do feel a little threatened by it, but at the same time, they're not. They're trying to put it in a box with gold, right? So they're creating. We're seeing the beginning stages of them. Instead of them creating a spot ETF, they create a futures ETF, which does nothing for the price. All it does is allows more people to. It allows for them to it puts pressure on the price of Bitcoin instead of it allowing it to keep going up. So so just like what they do with gold and silver, right, in the futures market. So except with Bitcoin, when you control, they don't have control over the miners as much as they have control over mining and gold. The miners in Bitcoin, they can't really control, like the same way that
they're trying to kick them out, essentially.
That's why they're trying. I think right now what you're seeing is part of what you're seeing, one segment of what you're seeing is that they're trying to get a handle on how they're going to control the miners of Bitcoin, and that's why I think you're starting to see things like. That's why you're getting the narrative, right? The narrative is that Bitcoin is bad for the earth.
And I have a question about that. Didn't a lot of the miners go next door to Kazakhstan because of the energy wealth and the price of gas? And then all of a sudden you had liquefied gas. The subsidies are removed, and you had that whole and you had the whole protest that turned violent. I'm not speculating. I'm just asking a question. If anyone can answer, so like you had a lot of the miners leave China and going next door to Kazakhstan. 2 weeks ago, obviously related with the Ukrainian situation and the whole Chinese strategic relationship with the Russians. But you had a lot of wealth go to Kazakhstan because that is BTC mining. So how does that?
Okay, I didn't know about that.
Well, I mean, yeah, a lot of them came to Texas. A lot of them went to South America.
Yeah, I know about that.
And a lot of them didn't go that far and just stayed in the region.
I just didn't know about Kazakhstan. I know that a lot of Bitcoin mining is always going to go to me, it's always going to go to the most friendly jurisdictions. It's always going to go to the most energy efficient jurisdiction. It's always going to go to places even where, I mean, if you can find a way to do Bitcoin mining with solar, with hydroelectric, with
with volcano,
right? I mean,
such as we are one of our favorite countries, El Salvador.
Right. So this notion that you need that you make money, like people that would be hooking up a Bitcoin miner, let's say in my basement, right? It's not that you can't make money that way in Bitcoin mining. You have to have some type of
the cost of running all those computers.
Right. The energy there has to be cheap to begin with, and in the best way, from what I understand, from research, it's got to be a renewable energy, right? It needs to be something that. So, if anything, it's actually supporting what they're wanting, in that sense, because it's anyway. But they have to try to find a way, to me, to control that segment of Bitcoin. Like right now, they have the infrastructure to try to put pressure on the price, and that's why that's to me. There's two reasons why we haven't seen that typical euphoric blow off that you would see in a bull market. One is that institutions are just now getting in, and they don't want euphoria right now. So the whales are going to try to keep the price low so that the bigger guys can get in. And two is that, like what we just discussed, like China, disrupting mining, during the summer, right? And so all that has put pressure on the Bitcoin price, and then you have futures and derivatives and stuff like that, which is putting further pressure on the price. So to me, what all they're doing is they're trying to buy time for the inevitable major move that's eventually would come in Bitcoin, which is going to drive the whole market, right? Now, how much time they're going to try to, when that's going to happen, that's what I'm trying to determine, right?
That's the question. I mean, there's so many factors, right?
Right. It could happen. The earliest it could happen, it could start back up would be starting in February, right? And in this analysis that I'm looking at right now is wrong, and instead we see 1, 2, 3, 4, and then this is 1 of 5 up here. This is 2 of 5 down here, and then we're going to be going into 3 of 5, right here, right? That's also a possibility. That's not the one I'm thinking is going to happen, but you have to think that that's a possibility, right?
I mean, I would say by next week we should know, don't you think?
We would know within the next couple of weeks. We have to see how the price action. We're not just whatever happens. It's not just going to recover and just explode in a month. It's going to be like we've done serious damage to the psychology of what's happened of the move that we've already had. I mean, the odds of us being in a bear market have like greatly increased. So, and let's go down the rabbit hole that we're in a bear market, right? Which we very well could be, right? Which I always refer back to this. So if we are in a bear market, then we are, let's see if it pulls up for me. Okay. So we got the thrill up here in March.
Right.
We never had the euphoria.
Right. I mean, we might still be on the way up to the euphoria. And you have to take, and I'm taking this into consideration. Maybe we don't get the euphoria because of futures, because of the way that they're able to manage the price, more so than what they were in 2017. Maybe we don't get it this cycle. So if we are going into a bear market, right. If we are going into a bear market, we did not get this. Right.
We got the thrill. We had the summer. We came back up on low volume, on very low volume. We barely made a higher high, which was more of a sucker punch higher high. And then they drove the price down. We had a lot of anxiety when we were sitting at just above $40,000. Right now, we have a lot of denial.
You think we have a lot of denial and panic? You think we're skipping denial and jumping down to panic?
I don't think
capitulating.
If we are in a bear market, you have not seen the true capitulation yet. Now, if we're in a bull market, you've capitulated. That's it. This was the capitulation. If we're in a bear market, we have not. I mean, not an ABC wave 4. If we already had our major wave 5 for this cycle, which mind you will be which will be a huge wave 5, that started from back in 2000 and from the inception of Bitcoin. Right. Like we've had, not only would it be a wave 5 for this cycle, it'll be the mother of all wave 5s, right? So and what I mean by that is just the larger cycle that's at play. So from 2009 all the way to 2021, there is a massive 5-wave structure in that as well, just from the inception. So then if that is the case, I'm just saying if, I'm not saying it is, I'm saying if that is the case, then we have seen anxiety, we're in denial right now, and that's this little bump right here. That's what that little bump up that I'm looking for right now. If we continue to head back down after that bump, then we are in a major. Yeah, then we have completed the full cycle. That's it. We're in that. There's no more. Then you're going to see. Then you're going to see the absolute panic. That's going to take you down to 20. Sub 20, right? $20,000. down here you're going to get 14,000, and then it's going to come back up. It's going to be painful, suck, whatever for 3 years, whatever it's going to take, and then it's going to rally back up to whatever $1 million, what everybody, all the numbers that are out there. So but I'm not saying that this is where we're at yet. Looking at Elliott Wave, though, this is a possibility, and we just never got the euphoria. That is a possibility. And that would mean that
possibility is that we're still on the way up to get to the euphoria. It's just going to be a big euphoria with then a sharp drop. I mean,
we don't necessarily have to have euphoria, though, and that's the thing. We don't have to have it. Now, I'm not in the reason like. You got to play both sides. You can't, that's why I did what I did, right? That's why I took a big chunk off, just to be able to I'm going to add a little bit once I think that that we might get that bounce. This next bounce, whatever bounce we're going to get, when it comes, it's going to come. I don't know when. I hope it happens at lower prices. I hope it happens at I hope we move lower from here before we bounce, because the lower we go before the bounce, the bigger the bounce is going to be. So but when it comes, that bounce is going to be tell off for where we're going to be at. So if this was an actual 5 right here, and we are headed into a deep bear market, then we'll get that bounce. It will either come, to me, in my world of thinking, it's going to come right above. It will peek its head right above this trend line, and it will come right back down. It will get all the bulls all excited. Everybody's channel will be exploding in terms of how bullish they are, and then it might hover there. It might do a little bit of a fake out, another fake. It might even do it twice or something, where you'll see it peek its head above this trend line right here, and then it will come. Then it will just crush everybody right back down, and then that's it. Everybody will throw in the towel, and you will completely capitulate. And so when that, if it's able to hold this, once we peak, if we peak back above, which I think we will, it will peak back above this little trend line, and then we'll start seeing buying coming in. You'll start seeing MicroStrategies defending that $31,000 average support zone that they've bought in at. You'll start seeing other institutions coming in. You start getting that feeling that, man, there's no way. You'll start getting too much money coming in, right? And then and it just won't be able to capitulate. And then you'll slowly start seeing the price. It might go sideways. We'll have another 60-day cycle, which will take us into February, March, the end of March. And then once that happens, so it'll be right here, the end of March. Maybe we don't. Maybe wave 4 becomes truncated, where the C is up here, right? Something like that. Hold on. So you get that C. It's just somewhat truncated. It's muted. It doesn't make a new low. So in this becomes a wave 4 from a higher level, a little bit of a higher level than what I would have anticipated.
Okay.
And then we head into wave 5. That's possible. So that's what I'm hoping for, right? I'm hoping we break this.
Let's hope so.
And it holds, right. And we'll know from volume. We'll know from, we'll have other indicators that the time to mark indicator is already flashing that we should be, according to the weekly, we should be at a bottom on the time to mark on Bitcoin right now.
Right.
So we'll see, man.
I hope so.
Yeah, I find it interesting everything we've everything we've discussed. But that's all I have. That's what I wanted to show you because, man, the fundamentals that you're talking about just makes so much sense with the technicals.
Right. So you definitely have to take into consideration what goes on in the macro picture. You cannot take this market in the micro. I mean, micro to a certain extent, but and when you speak of macro, you're looking at domestic politics, which is going to affect international politics, which is going to affect international economics, which will affect domestic economics. So it's a whole cycle. So you have to take that whole into the picture, and I'm glad that you're able to apply that to the technicals because, while a lot of us can see this, and everyone has an opinion when in terms of what's going on in the world, but hopefully this gives a perspective in terms of what's going on in the crypto market that others can use and take to their advantage.